Good afternoon. My name's Alexandria Ferguson. I'm the Assistant Creative Director here at O&M Partners. Today, we would like to welcome you to the Grid Metals Corp Town Hall webinar. Grid Metals trades under the ticker GRDM on the TSXV and under the ticker MSMGF on the OTC. For those who are new to our broadcast, O&M is the link between the investing public and public companies. In past times, these groups passed each other like ships in the night. Our digital roadmap enables us to keep pace with tremendous changes in investor demographics and how they receive information. We want this broadcast to answer all of your questions. Questions will easily be answered by going to the question pane of the GoToWebinar panel or by emailing us. For any questions that remain unanswered, we'll follow up in a timely manner after the call. For those who dialed in by phone, the only way you can hear our pre-recorded introductory presentation is on your computer speakers. If that's not possible, you'll be able to hear the main presentation after 12 minutes, so please stay tuned. Our introductory speaker today is Jack Lifton, CEO of Jack Lifton LLC and technologymetals.com. Jack Lifton is a consultant, author, and lecturer on the market fundamentals of technology metals. Technology metals is a category term now in wide use that he coined at the beginning of the 21st century to describe those strategic metals whose electronic properties make our technological society possible. These include copper, the rare earths, the platinum group metals, the steel alloy metals, lithium, cobalt, graphite, and most of the rare critical metals and materials necessary for our health, safety, and technologies, both consumer and military. He is on several technical advisory boards in the mining and metal refining sector and is also a founding co-principal of Technology Metals Research, LLC. Without further ado, Jack Lifton.
Good afternoon or good morning, depending on where you are. I'm Jack Lifton, and I'm going to talk a little bit today about critical and strategic metals for the grid, which basically means to power our society. It's interesting to me that the scientists who study the development of humanity, as most of us know, it defined what they call the first three stages of civilization living together as the Stone Age, the Bronze Age, and the Iron Age. Unfortunately, most people think, well, then that was way in the past. The fact is the Iron Age actually only came to an end during the American Civil War when the mass production of steel was introduced by Bessemer and others. And from then on, the use of steel exploded in our society. And quite frankly, we're still in the Iron Age, only it's steel. However, lately, in the last 20 or 25 years, we've entered a new age, the age of technology metals. These are the metals, the electronic and electrical properties of which make our technology society possible. The key metal for energy production and storage, distribution and use is of course copper. And I want to cite a statistic here that should interest all of you. 20 years ago, the United States, with 5% of the world's population, used about 20% of the world's copper. Of course, we were wiring like crazy, as you may remember from the dot-com era. Today, 20 years later, China, with 20% of the world's population, uses 50% of the world's copper. What's going on? China's catching up. In the last 25 years, China has produced as much steel or more than the United States its entire history. China has consumed more copper than all of the rest of the world combined. As China develops and continues to develop, this demand for copper is going to continue. The United States today imports 1/3 of our need for copper. That's amazing to me, because the United States was always self-sufficient until sometime after the Chinese began consuming copper. Now we actually have to import copper, even though we have excellent deposits in the United States. And of course, no new ones have been developed because of environmental resistance. I'm not going to say environmental concerns because they're not real. It's the resistance that's important. Now let's talk about the metals lithium, cobalt, nickel, manganese. Why am I saying these in the same sentence? Because these are the metals from which lithium-ion batteries are constructed. Now, in which of those materials is the United States self-sufficient? None. Now, isn't that interesting? The United States last year produced 500 tons of cobalt. That means you could make, that was 500,000 kilograms. Yeah, divide that by 10 because an average Tesla car today uses 10 kilograms of cobalt in its battery. And you get the fact the United States produced enough cobalt domestically to produce 50,000 Tesla cars. The United States last year sold, there were 17 million cars sold, and even 500,000 electric cars. So where did the raw materials come from? They came from everywhere else but the United States. We're minority suppliers, certainly of cobalt. We produce exactly 1/3 of 1% of the world's cobalt. We produce about 5% of the world's copper, 1 or 2% of the world's lithium, none of manganese today, and yet all of these materials are in abundance in North America. But what's kept them from being produced? I don't want to get into politics, but it's been environmentalism, very misplaced, because all we do when we virtue signal about not producing lithium in California from the geothermal wells or in North Carolina from the spodumene deposits, when we say we can't do that because mining is dirty, all we mean is let the mining dirt be accumulated in China, Africa, other places so we can feel good about it. And then, of course, we'll ignore that when we price these materials, and we'll say, well, we can't do it here because it's cheaper to produce it in China, where they don't capitalize any of these costs, environmental, safety, health. Okay, we are increasingly dependent on these technology metals, these formerly exotic metals, lithium, cobalt, manganese, nickel, and of course copper for our society's not only just growth, the maintenance of our society. So these can all be produced in North America. They can all be produced in Africa. Most of them produced, more than most of them, can be produced in South America, where the bulk of the world's lithium and copper comes from anyway. So if I don't like to give investment advice, but if you ask me, I will. And I'm telling you to take a hard look at North American opportunities to produce these grid metals, these metals for the storage, production, distribution, and use of electricity, because that's where the future is. We're in strong competition with China and then India, and sooner or later, the billion people of Africa for these same resources. Everyone needs to produce to develop their own societies. We certainly do in the United States. At the present time, our government seems to have discovered this, and they're promoting domestic self-sufficiency in these critical technology materials. Last week, the Department of Defense announced that next year's authorization bill for them will include almost $2 billion to purchase rare earth type services and products, providing they're produced domestically. Sorry about the phone. This is a wake-up call, but the Defense Department actually uses maybe 5 to 10% of these critical metals, if that. It's the consumer economy where these metals dominate, where the use of them dominates, and that consumer economy is huge. You can't make a car without copper. Today, you can't make a car without rare earths. You can't make a car without palladium, platinum, and rhodium. None of these materials is the United States self-sufficient. And yet, just the American new car market is $500 billion a year. The American used car market is bigger than that. Just the automotive industry. The consumption of, for example, uses 10,000 tons of rare earths a year. How much of that is produced and refined in the United States? None. This situation obviously can only go on if we're allowed to do it by those who now control these exotic materials. So formerly exotic. We need to look to our own doorstep. We need to take a hard look at these companies that are producing these critical technology metals here or in allied countries, Canada, Australia, for example, are the best. And we need to do that now. So the automotive industry is perhaps, without us realizing it, the major consumer of grid metals. And I think what is really not understood here is that whether or not electric vehicles become predominant, or even a significant portion of those sold, the need for palladium in particular, platinum and rhodium, will never go away. All of these metals are in deficit. Palladium is produced in North America. The bulk of the world's palladium comes from Russia, and then some comes from South Africa, quite a bit from Canada, and the US is number 4 in production. But we don't produce enough at this point to take care of the cars we know we're going to make. Even if let's say electric cars are 50% of those sold in the year 2030, which is a very optimistic, that would mean that between now and 2030, 100 million cars, of gasoline-powered cars, at least as much, maybe as many as 200 million, will be produced and sold in North America, every one of them requiring an emission exhaust catalytic converter, each of which has in it up to 4 or 5 grams, a sixth of an ounce of palladium. Please multiply that out by 100 million and 200 million, and think about what I'm saying when the world's production of palladium today is about 300 tons a year. Think about what's going on here. By the way, the production of rhodium, which is also required in new cars, each car with a gasoline engine, the production of new rhodium each year is 30 tons. 30 tons. Contrast that with gold at thousands of tons a year. Silver, 20,000 tons a year. But rhodium, which is far more important to our society than gold, 30 tons a year. So think about it. Palladium, 300 tons a year. It's not enough. We have to find more sources. There's quite a bit of nickel and palladium and even cobalt in North America. We need to start producing it. We can't pretend anymore that there's not any here, that it's produced cheaper in Africa, produced, and the Chinese are doing all the work anyway. It's time for technology metals critical to the grid to be produced in sufficient quantity in the United States so that we don't have to worry about anybody else's problems or influence. Thanks.
Thank you so much for that, Jack. Now we're going to turn to our main presentation. Our presenters today are going to be Robin Dunbar, President and Director of Grid Metals, and Dr. David Peck, VP of Exploration and Business Development. Robin has been involved in the mining industry since 1996, following 14 years in commercial and corporate banking in Canada. He's also a director of McEwen Mining and is a former director of Australian nickel producer Western Areas. Additionally, he served as the CFO and a director of Aquila Resources. He received a BA from Western University and an MBA from Dalhousie University. His commercial banking and finance background, together with his experience in the mining industry, make him ideally suited to bring Grid to fruition. Dave has joined Grid Metals in a consulting capacity to oversee business development and exploration. He has extensive experience in the mineral exploration and mining industry, most recently as Vice President of Exploration for North American Palladium Limited, prior to its acquisition by Impala Platinum. From 2003 to 2009, he was a global nickel commodity leader for Anglo American plc's exploration division. Dave has a PhD in geology from Melbourne University, Victoria, Australia. So we'll turn it over to you guys, Robin and Dave.
Great. Thanks very much. Just pull up the presentation here.
Robin, you'll want to turn on your web camera too when you get a second.
Okay, there we go. There we go.
Perfect.
Okay. All right, so welcome everybody, and thanks for tuning in to our presentation. And this is our third in a series of presentations with O&M over the past several months. And our company has been focused on the grid metals, as Jack mentioned. We're one of the very few companies that actually has exposure to platinum group metals through exploration, but also at our Mayville property in Manitoba. We have a resource there of nickel, copper, and PGMs. And that project we've been working on for a number of years. We need higher nickel prices for that, which I think will happen somewhere down the road. But our current focus has been on our palladium exploration project, the EBL Lake project in Ontario. And that's what we're going to focus on today, because we think this is a tremendously exciting project. And we think we've got a real shot at finding a new significant deposit there. So I will be, Dave and I will be making some forward looking statements today. So we want to put up the usual disclaimer. Let's move on to a little bit of an overview of the company. So as noted, Dave and I are the two senior management positions in the company. And Grid has been around for the last 20 years, over 20 years. Our market cap back in 2007 at the height of the nickel market was $100 million based on our Mayville project in Manitoba, and which is about 140 kilometers outside of Winnipeg. And we've held the EBL Lake project for many years as well. We had that project during the first palladium boom during my time in the mining sector, which occurred from about 1999 to 2002. And that's when the price of palladium rose to just over $1,000 an ounce. And there was news reports about calling it unobtainium. They were worried about a real global shortage. And the price then subsequently went down to about $200 an ounce, where it languished for many years. I think part of that was due to the Russian stockpile, that the Russians still had considerable stockpiles of palladium. But I think the supply demand fundamentals right now for palladium are really, really good. And a key milestone for our company was getting Dave to join us at the beginning of this year. I've known Dave for about 20 years, and we've kept in touch over the years. And when we did a joint venture on our EBL Lake project in 2000, Dave was with Falconbridge, and we spent a lot of money on the project at that time. Dave was involved, and then Dave went on to have a very distinguished career looking around the world really for platinum group metals and nickel. And I think it's safe to say there's not too many deposits or geological formations that Dave hasn't looked at, both from a geological and economic point of view. So most recently, Dave's been with North American Palladium, and there he was one of the members of the senior management team. And that company was sold to Impala Platinum for $1 billion. And that makes, there's two producing palladium mines in North America right now. Both of them have been bought out by the South African producers. And I think what that tells us is that if a junior company can come up with a major new discovery with the right attributes, with a lot of palladium in it, it would be a very strategic asset, and it would be worth a lot of money. So in Dave leading our exploration, we got the right guy, both for our nickel project and our palladium project. Yeah, just to amplify a little bit what Jack talked about the palladium market. You know, Sibanye took out Stillwater Mining in April 2017. Impala acquired North American Palladium in December 2019. And there's a reason for this. Both the South African companies have a lot of resources and their reefs in South Africa. But if you look at in particular what Impala, the reason they came to Canada, they like the political risk here. They like the deposits here are palladium dominant. They like the cost structure here. And they believe there's a very good medium-term price forecast for palladium. So they, unlike gold, the palladium market is made up of producers with sales forces, and they go out and sell the metal. And there's customers, and you know, we think that what Impala investing in North America is telling us is that they believe that palladium will perform very well over the next 5 years. And if you look at the price chart, palladium, the fundamentals in the last few years have really kicked in. We've seen the price, you know, go to above $2,000 an ounce US. It's been a little bit softer recently with the COVID-19 global pandemic, where really the car sales are down dramatically. But even with the significant decline in automotive sales around the world, the price of palladium has hung in, and that just shows that, you know, in my mind, it's a very strategic metal. So we see the platinum producers in South Africa, you know, they produce more platinum in South Africa than palladium, and we call this the rebalancing of their baskets of production of platinum and palladium. I just you know, want to highlight that palladium has been in a deficit. It's about a 10 million ounce a year market. You know, that last year there was a deficit of about 1 million ounces. This year is forecast to be a deficit, although not as great. But you know, this doesn't show any sign of abating soon. Palladium, you know, some things that maybe not people are aware of. It's really rare globally. It's very few deposits are palladium dominant, where palladium is the metal of most value in a deposit. It's used in hybrid vehicles, and it has superior catalytic properties, temperature properties in palladium, and so it's difficult for the automotive companies to engineer palladium out of their auto catalyst designs. So we see that the users are primarily the auto companies. They value stability of supply. Particularly North America is a very stable place. As Jack said, we don't produce enough here to support the automotive industry. Very little production in Europe. There's just a demand for very stable supply of palladium. And if you look at where the supply comes from, it's what we would deem as fairly risky jurisdictions. South Africa, which has a lot of challenges in terms of their cost structure, the societal risk, and then Russia, which is a pretty tricky place to do business. And so again, we think that if we could come up with Grid Metals with a significant new deposit of palladium in North America, and where our project is located, it's going to be worth a lot because of its strategic value. And this is a map that shows the location of some of the major districts in the world. They're concentrated mostly in Russia and South Africa. There are some opportunities in Australia South America. What we see is in terms of palladium ore grades, typically from 1 to 5 grams per ton. There's a lot of attributes that again are flying a bit below the radar screen in terms of some of the juniors out there, grade tons, but also metallurgy. Basically they're referring to the concentrate grade when you process it. If you can make the right type of palladium concentrate from your mill, that's an extremely valuable and desired commodity by the producers and the trading companies. And I think it's safe to say that at East Bow Lake, we have a geological formation, a large geological formation, which appears to have the right attributes. And we have a really good idea of what we're looking for in terms of significant bulk tonnage or underground deposits with good metallurgy. And one kind of market comparable I'd just like to toss out is Chalice Gold has made a recent discovery of palladium mineralization in Western Australia, just outside of Perth. And their market cap went from under 100 million to over 300 million dollars on, basically a couple of drill holes. I know they've had some follow-up, they've been lower grade, but it just shows you that these types of systems that we're working on, geological systems, if we can come up with some good results, I think there's plenty of upside in our stock. We currently trade about a $14 million market cap. We just completed, as we just announced today, another $800,000 of financing. So we have about $2.3 million in the bank, and we're starting a drill program very shortly. The drill's mobilizing next week to our property. So with that, I think I'd like to hand it over to Dave to talk about East Bow Lake, why we think it's a good opportunity, what's changed. We've had this property for a long time, and how Dave's going to go out and find a significant deposit for our shareholders.
Thanks, Robin. I think I want to get the power, the control over the slides, if somebody can give me that. Okay, perfect. Cross your fingers, everybody. Let's see if we're a go here. There we go. So I will give you a brief introduction to just the sort of location and access for this project and a bit of history and why we're so excited about it. I should say, to follow up on Robin's comment about, well, we've known each other for 20 years. We actually started sort of working together indirectly on the East Bow Lake project. I always felt very passionate about this property, and it's rare in a geologist's career that you get a second kick at the can. So coming back 20-something years later, I did the original mapping and prospecting at East Bow Lake in the early 90s, right out of my PhD in Australia. I came back to Canada as my first gig, and really learned a lot. I felt very good about the project at that time. I wrote a few reports on it, and then sort of migrated away from Sudbury, moved on to other things, and built my career on PG and nickel, as was mentioned. So coming back now, and especially the experience I gained at Lac des Îles mine, and working, really rebuilding the mineral resource inventory there over a period of 5 years, I really learned what the controls are, the geological controls, what to look for to find that type of resource. It's a 10 million plus ounce palladium resource. They're as rare as hen's teeth around the world. As Robin mentioned, a lot of the projects in South Africa are platinum dominant, and in Russia, palladium's a byproduct of copper nickel mining, mainly in Norilsk in Siberia. So primary palladium projects in the world, there's really only a few, and East Bow Lake is one of them. And having the chance to apply the knowledge that I gained at Sudbury, at Lac des Îles, but also my time in Anglo-American working on the Bushveld complex, on the Platte Reef deposit in particular, with my colleagues at Anglo Platinum, I really learned quite a bit about the controls and how to get to the answer quicker. So we brought in some geophysical tools that worked well for me in recent times. And a couple of years ago, first exposed to this method, and I'll talk about that in a minute. And we think that's going to be the key to developing the new targets that hopefully will become the deposits we're all hoping to find at East Pole. So the project, the location map on the top left is 80 kilometers west of Sudbury. A little town called Massey on the Trans-Canada Highway gives us access via provincial all-season road Highway 553. The project has got a network of forestry roads through it, so we can basically drill to any or reach any part of the property by road, and we can drill all year round, which is not all that common in northern parts of Canada because of swamps and lakes and so forth. The location next to Sudbury is critical. We feel that that is advantageous for us in a number of ways. First of all, the mining workforce, the familiarity with mining, the mining culture. Mining's still going strong in Sudbury after over almost 150 years. Two giant smelter complex. They produce PGM through various refining affiliates to the Glencore and Vale smelter operation in Sudbury, and they buy palladium-rich concentrate. And certainly that North American Palladium, we did business with both of those smelters over the time that I was there. So the infrastructure is fantastic. The mining culture and support for mining, which is not great everywhere in North America, as Jack alluded to. We need to be certainly a lot more supportive and looking down the road. Where are these critical technology metals going to come from? And East Pole is a rare geological opportunity that's very well blessed with anomalous palladium concentrations across the entire property. The map on the bottom has got a series of colored symbols, and you can see the legend there. It's those symbols reflect the palladium grade of both surface and drill core samples over a period of 30 plus years of prospecting and intermittent exploration drilling. And you see there's really from east to west a very good distribution of anomalous samples, including many samples above 2 grams. And that is, an explorer is really your threshold. Once you start seeing plus 2 gram material, you're into an environment where you can develop a primary palladium deposit, as Robin mentioned, one where the value of the ore, more than half of it is associated with palladium. So very rare geology. This is part of a suite of bodies around the world of the same age that all have known or are very prospective for palladium mineralization, or they have known deposits. There's some in Finland that are a bit more advanced, but East Pole has sort of just had the surface scratched. The drilling that's been done, there's over 100 holes, but scattered over a property that's 20 kilometers east to west. It's basically not much drilling, and the drilling's shallow, and it was based on a model that was in fashion for many years, and it still is, where you see the mineralization developing along the margins of the intrusion. So the outline is in blue here, and you can see a lot of the mineralization is on the south side of the body, and that was sort of the guiding model at the time. My work at Lac des Îles really opened my eyes, and I think very few people have had that eye-opening experience unless they've actually worked there and actually seen the evolution of thinking on how Lac des Îles formed. And it's a very different approach, a very different deposit model, and a very different approach required to explore for and find that type of deposit. So just in a nutshell, it's all about structure. And these black lines, dashed lines, are, we feel, potentially the main feeders, the magma pathways through the Earth's crust that allowed the development of this massive intrusion. And inside those structures and adjacent to those structures is where we expect to have maximum potential for a thick and high-grade deposit to form. So we've focused on 3 or 4 areas for the upcoming drill program, and I'll show you a little bit about the geophysical results that we used to develop our targets. Just for context, for scale, I know it's hard to get your head around the size issue for exploration properties. So this is a scale of 5 kilometers, a top map showing the outline of the East Bow Lake intrusion, 20 kilometers, actually over 20 kilometers long. And there's the intrusion that hosts the plus 10 million ounce global historic resources at Lac de Zile in the inset map on the top right. So that's about 3 kilometers long. East Bow Lake is about 7 times as large. And that the main resource at Lac de Zile is actually fits in the outline of the Roby open pit, which is the orange colored polygon there. It's about 800 meters of strike length, that pit, and the deposit that was exposed at surface and mined in the pit first, then underground mine. We haven't found the bottom of it yet. It's on a vertical feeder structure, and it goes at least 2 kilometers in depth and probably continues deeper than that. So that's the type of thing we're looking for. We're going to use the structural model, the structural control model, to explore. And so then what are we looking for? What we know from the past at East Bow Lake that does have high-grade mineralization right at surface, samples up to 15 grams combined palladium, platinum, and gold. The mineralization is typically palladium rich, often with palladium to platinum ratios greater than 3 to 1. So that's a positive in this market with the price differential that we see now. And so the economics then really dictate what to explore for, how to explore for, what's the fingerprint you're looking for, what target sizes do you have in mind, what are the economic drivers for those decisions. And it comes back to the value of the ton in the ground and then the NSR value. What is it worth to a smelter? And what are they going to pay you for the concentrate? So we're looking at palladium grades for open pit type deposits at East Bow would have to be in the 1.5 to 2.5 gram range. You could probably mine lower grades than that if the palladium price stays as strong as it is for a long time. You can't bank on that, so we're looking a little bit more conservative, and we feel, looking at the history of PG mining and economics, that 1.5 to 2.5 gram range is where we want to be for surface. For underground, we want to be plus 3 grams and thick. The narrow reefs that are mined in South Africa generally would not be economic to mine in North America, given the different cost structures and the availability of, let's call it what it is, cheap labor in South Africa for the platinum mines there. So the only one that would have been viable that I know of as a reef type deposit is actually making really good money right now, the Sibanye Stillwater JM reef in Montana. No one's found anything like that since the JM reef was discovered 30 years ago or so. And lots of people have looked. I was involved in exploration programs for PG reefs, and I can tell you it's a lot easier to make an economic business case for a Lac de Zile type deposit, thick, bulk mineable underground or at surface, and with that high grade core that you need to see to ensure the economics. So that's what we're looking for. To date, we've found 5 major structures I mentioned on the map, again showing those dashed lines on the bottom. Any one of those could be a feeder that's mineralized, and we do actually see from previous exploration and drilling that some of the mineralization indeed follows these structures, but the structures themselves and the concept of a vertical feeder and with mineralization in and adjacent to that feeder hasn't really been tested. So we were looking for a way to find effectively sulfide traps. The palladium grades at East Bow Lake, if you get a gram of palladium in a sample, you probably have 1% sulfide, and it's mainly copper sulfide. And if you get 2 grams, you're probably 1.5% sulfide. And if you get 3 grams, it's probably 2%. And that relationship holds together very well. We have thousands of assays for the property, a lot from surface, some from drilling, and you get a really good correlation between total sulfide abundance in the rock and the palladium grade. So what we're looking for is something in the order of 3 to 4% sulfide, and that should translate into grades that are 4, 5, 6 grams per ton. That's the kind of meal ticket we're looking for. That's what the anchor is at Lactazile. It's the high grade zone at Lactazile, and it averages about 4 grams in situ grade. So we brought in a geophysical method that had not been tried before at East Bow, and in fact generally not used for this style of mineralization. We call it disseminated sulfide. Again, looking for a few percent maximum. Sulfide, the sulfides, if they're connected in a rock, they conduct electricity. They're good conductors, so you can pick it up with the methods called EM, or electromagnetic survey methods. This type of mineralization at Lactazile at East Bow does not conduct electricity very well. It does, however, have an effect on the overall electric field, which moving through the Earth's surface, the natural field. And a little bit of sulfide can distort that field, and you can detect that distortion with a method called magnetotellurics, or MT. And without getting into the nuts and bolts of the mathematics on it, it's effectively allowing you to see small changes in the resistance, the electrical resistivity of the rock, which generally would be related to sulfide. It can be caused by other things. But that's what we saw in projects. I've used this effectively in the past at North American Palladium. We were able to see sulfides 1, 2, 3% over a few meters of thickness down to 1.5 kilometers depth using this surface geophysical method. So that was the first thing I wanted to try when I joined GRID, and we completed the survey a few weeks ago. We had a couple of press releases out on the initial results. We've done some more modeling on the data and come up with about 12 drill holes and a 5,000 meter initial drill program. We'll do it in stages. And the first area we're going to test, the drill should show up next week, as Robin mentioned, is called our Parisian Lake grid area. And this is more or less in the middle of the property. And it's an area of historical surface showings, and also drilling has intersected anomalous mineralization up to 1 gram or more over several meters in several holes. And it seems to be the mineralization is trying to follow this structure called the Parisian Lake Deformation Zone. The map on the top is a plan view. We're looking down, and the color inset inside that red rectangle is actually the results of the geophysical survey, showing the results at a depth of 450 meters below surface. So the wonderful thing about the MT data, magnetotelluric data, is you can actually do depth slices and see anomalies come and go at different depths, and you get a true three-dimensional model of the electrical properties of the rock down to great depths. And then the map below is a cross section, and it's you can see the section line drawn on the map on the top. And we're basically looking on the left west and on the right east. And this is now a two-dimensional cross section along that profile line. And we're seeing that the hot colors are the strong anomalies. These are the things that we want to drill. And it's like most geophysics, the hot colors are good, the cold colors, blue, is bad. So we've got some pretty strong anomalies, and just a sense of scale. The scale bar is actually showing it. It's pretty small, hard to read. This anomaly here we call the number 4 anomaly, Parisian Lake 4. It's about 2 kilometers long, and it's actually open down plunge to the west. So it comes to within 400 meters of surface, but there's not a single drill hole that's tested this anomaly or any of the other 3 or 4 anomalies we found on the Parisian Lake grid. So this is exactly what we were seeing in this other project I mentioned We had really good success with this method, and the project was called Sunday Lake. So I'm just going to do a little comparison. The project at Sunday Lake was actually the discovery made many years ago, but really the PGM mineralization there was discovered a few years ago by a company called Transition Metals. They're still a minority owner of that property. And when I was with North American Palladium, we did an option deal to earn a majority interest on this property. And we made a big discovery on the west side of the property. And what I'm showing here is exactly the same scales. The image on the right is the Sunday Lake magnetotelluric survey results shown in plan view. And it's capturing a distance or a depth of between 800 and 1400 meters, sort of merged the data, averaged it over that depth. And then the image on the left is a close-up of the anomaly number 4 in plan view as well of that Parisian Lake target area. And so the scale, the size of the anomaly is very similar. The intensity of the anomaly is very similar to what we saw at Sunday Lake. So just back to the image on the right, the Sunday Lake anomaly was a new target. It had never been seen before. Obviously, there's no drilling to that depth. We drilled a 1,400 meter hole. The first hole that targeted the what we call the big red anomaly for obvious reasons. And it intersected 41 meters of 5.5 grams of PGs with a higher grade section of almost 16 meters, approximately 10 grams combined. And there's also a healthy amount of copper, up to 1% over many meters of thickness in this area. So that was proof of the pudding. Since then, there's been a little bit more drilling at Sunday Lake, and we continue to see positive results from that project. And we're hoping for the same at East Bowl. The geology is not identical, but it's similar. And we also have the lactazile model, and why we're so keen on that lactazile structural model, looking for something thick and vertical rather than these thin reefs or these lower grade zones along the contacts. It is just the absolute no-brainer economics, and the geology between lactazile and East Bow Lake, they're virtually identical. You can take a geologist an outcrop at East Bow Lake and show them something similar at lactazile, and they wouldn't know which property they're on. They're so similar. The textures, the minerals, the sulfides, the palladium grades, very, very similar, almost uncanny. We have other results to show you. This is another comparison slide on Sunday Lake. It's just showing, instead of plan view now, we're looking again at the same scale of the Parisian Lake anomaly number 4, which we talked about already, sort of dipping off to the west, coming close to surface at the east, and then this Sunday Lake geological section with the platinum metal zone shown in red along the bottom of the intrusion. We might be seeing the same kind of thing here at East Bow Lake with an undulating contact with kind of hot spots where the sulfides are getting trapped. And hopefully we'll be testing that right away here. And hopefully that's what we're seeing. And then there's other results. I won't get into all of them, but basically everywhere we did MT, we got really good anomalies that make geological sense. They're near known mineralization, they're in the right geology, and they're all untested. So not any of the strong anomalies we've seen with this result, magnetotelluric survey, have been tested. So that's, we got a wealth of targets to go after, and we're just in the process of finally prioritizing. And like I said, we're going to start with Parisian Lake first, because that's where we got our strongest anomaly and largest anomaly. So I won't get into the details on these slides. We also did a survey on the eastern part of the property. And again, there was some historical geophysics over the area. This image is actually a magnetic map. And you can see that big structure showing up as a magnetic high. That's kind of pink color feature. We call that the Sables River structure. And then the known mineralization is just off to the west side of that feature. So again, that could be a feeder, and the mineralization is sort of spilling off along the original intrusion contact with the country rocks or the basement rocks. So this is another type of target. We do have discrete magnetotelluric anomalies in this area. We're going to test 2 of them this summer. If we get good success from Parisian Lake, we'll move on to this area as well. And hopefully with good success, we'll be able to keep drilling at Parisian Lake and also start on this area. So the size of the property is a bit mind-boggling, hard to get your head around, but it does give you the opportunity to find multiple deposits, and we think that potential definitely exists. So just summarizing East Bow Lake, we're going to start drilling with the next week or so. The drill should arrive early next week, and then a couple of days to get things sort of lined up. We're going to test a range of anomalies, magnetotelluric anomalies, all related to structures, all potentially related to increased sulfide abundance. And we'll start with Parisian Lake. So we have excellent potential to make a discovery here. I'm very stoked about the program. The geophysics returned better results than I could have hoped for. And now proof is in the pudding. So nature, it is what it is, already ordained, and we'll put the truth machine on the property, and we'll find out very shortly and hopefully have some great news to report. So it's a great time to invest in the company. We've got other assets in Manitoba, as Robin mentioned, our Macro nickel copper project, waiting for higher metal prices. There's also potential to follow up on a nice palladium discovery that was made on the Mayville part of that project a few years ago. And I'm looking forward to getting the opportunity to go back there as well. But right now, laser-like focus on East Bow Lake. So I think with that, I'll close off my part and turn it back to the organizer, or Robin.
We'll turn it back to both of you guys. If you both want to stay unmuted for questions, we'll go ahead and start today's questions with Marshall Barrel. Marshall, are you on the line?
Yes, I am. Thank you very much. Thank you for the presentation. I do have a couple of questions. The Sunday Lake, that's an Impala project, I take it, and is that where is that located?
Yeah, so Sunday Lake is 30 kilometers north of Thunder Bay, and it was originally Magma Metals. Actually, Rio Tinto had it for a while. Magma Metals had it for a while. Transition Metals came in under the subco called HTX Minerals and really made the discovery a few years ago. It was the discovery of the year for, I think, the Ontario Prospectors, Northwestern Ontario Prospectors Association. So that was a little bit of press out there on it. And then when I was with North American Palladium, I was able to do an option deal with both Impala and Transition Metals to, again, have a path towards majority ownership. In fact, to buy out Impala completely from that project because they'd made the decision to not continue with global exploration and really focus on acquisitions. And then as funny things go in life, we just sort of got our majority interest and made the big cash payment to Impala. And then Impala came back and went through the sale process, and they ended up buying us. So they end up with North American Palladium and the project back. So yeah, that's the story there. It's a very good PG discovery, a legitimate discovery, and I'm looking for. We'll follow the news on that as much as will come out through Transition Metals, that they'll have success going forward.
All right. Yeah, that's helpful. Thank you. Now, your drilling program, you're going to start that, you said next week. And if I heard correctly, it's going to be 12 holes, about a total of 5,000 meters.
Yeah.
Over what period of time would that be? And when would you anticipate starting to get assays information out?
So the program will take, we'll probably do about 70 to 100 meters a day on average. We're only having one rig to start with, we're kind of taking our time, making sure the holes stay straight. There's it would be not appropriate or logical to put more than one rig on at this point. So we're all about proving the concept. Are these targets, are they sulfides? Are they palladium rich sulfides? And we have lots of indirect evidence that they are, but you will never know until you drill it. So say that first phase is stage 1, that's Parisian Lake drilling. There's 5 holes there, about 2,500 meters. That's going to take us about a month or a little bit more to complete the drilling. And the assays, we're expecting about a 10-day turnaround. So we'll probably start cutting the core right away, and we'll get down to target depth. So we should have some initial results early July, I would say.
All right, fine. Thank you very much. One other question. You said you just raised $800,000. You now have, I think you said, $2.3 million. What, other than the drilling, what's your burn?
Robin?
Yeah, it's about $500,000 a year for the everything.
Okay, very modest. Good. Thank you very much.
Yeah, and what's very interesting is our projects we don't really have any property payments or anything, so they're really light to carry, which is one of the reasons we've been able to hang on to big property positions for many years. Yeah, so we're fortunate that way.
Why is there no holding costs?
You know, we did options at East Bull Lake, and we made the payments years ago. And because we've spent so much money on the property, that we kind of bank the credits. So it is $400 a claim unit. So it's about $170,000 a year, but that is covered by the money we spent on exploration. So effectively, we don't have to make any out-of-pocket payments. So once we're, for example, once we're finished the drilling, we'll have about 5 years assessment credits on the property. Yeah, and same for Manitoba. We have big position there, and we spent quite a bit of money on that property as well. So yeah, that's an advantage, because a lot of times companies get, you acquire a property, but you got heavy payments, and then if the market cools down, you're kind of stuck paying money for projects you're not really working on. So it's been an advantage for us.
Yeah, that's a big advantage. Fine, thank you very much.
Here.
Thanks for those questions, Marshall. We're going to turn to Doug Loud. Doug, questions today?
Hi there. This is very interesting, but do you have, I mean, you've gotten your $800,000, but how long is all this going to last you to do this drilling? I mean, one way you find out it isn't what you think it is, and then it won't matter. But if you find out it is what you're hoping for, then what happens?
Well, Doug, I think, for a junior at this stage, what you hope for is that you drill, you get some results that the market likes, and the stock price goes up, and yeah, you do need to raise more money, but you're doing it at higher prices. And that's kind of the cycle that, I call it the discovery cycle, where the value of the company is going up, even though you're issuing more shares, because the market appreciates the results you're getting. So, that's what we'd like to see. And I always say to people that kind of the classic example in the market right now is something like Great Bear Resources that has just been drilling away on their gold property. They don't have a resource, but they have a $500 million market cap, and their stock's gone from 40 cents to $11. That is kind of the, what you hope for. In the instance that we drill some of these targets and we don't get what we're looking for, we're not going to spend all $800,000 right off the bat. So we will be, if we don't get results that we're looking for, we'll have to circle back and try to assess, what we're doing wrong. Do we do more geophysics? Do we reassess some of these targets? So yeah, that's we don't want to be spending our last dollar on this project in terms of the going concern value of this company. And the other thing I might point out is, for our Manitoba property, we have about the current prices today, the resource value at that property is about $2.5 billion. We did a PEA. We used $8 nickel on that project. It's a significant project, but we need higher nickel prices. We need to do more exploration now. Dave's going to help us with that. And we think there's a real kind of store of value. So when the nickel cycle comes around, we've got, a significant asset there. So, we want to be measured in what we do, but give our shareholders the chance that, we could have a real uptick in market value, and, have an opportunity for a real successful, move in our share price. I think that's, it's a speculative industry. People want to see us go from, our current market cap about $14 million to significantly higher. So that's what we're going to try to do. And East Bull Lake gives us a chance. It's got the right geology. We got some good targets. It's not prohibitively expensive to drill. And I think if we do have, some good results, we'll get a ton of attention, from all corners of the world, because this type of project, new good drill results, is really rare. So, that's what we're setting ourselves up for, but we're going to keep a bit if it doesn't all work out to plan.
So you could have an exciting summer. I wish you great luck. It's very interesting. Thank you.
Yeah, thank you very much.
Thanks, Doug. We're going to turn now to Martin DeBovis.
Yeah, very, very interesting presentation. It's really exciting. But is your intent to prove that the minerals are there and then sell this to a company that will actually do the mining in the future, or actually do the mining yourself?
Well, I'll give you my opinion. Robin will give you his. They're probably the same. You never know whether you're wanting to go and your shareholders want to go through that process of transitioning from explorer to developer. And there's all kinds of exit points along the way, and you assess as you go what makes sense. Where can we get the maximum value for our investors? And it often is after that initial discovery, where there sort of can be a feeding frenzy, and you really get the value of the company and the value of the project to its peak. And then you'll see a long period of time where you're basically putting lots of money and nothing's coming out the other end. And that's the expensive part, the development part. So it's not an easy path. And certainly there's companies that we know very well and have lots of contacts in the business that would be following us and probably be talking to us if we make a discovery about some kind of arrangement, whether it's an option or a sale process, who knows? And we just wouldn't be able to make that decision right now.
Yeah, I agree with what Dave said. I mean, our basic, idea here is make a discovery. Certainly, Dave's experience is in drilling off resources, and that would be, very accretive to shareholder value. So that's what we do. And I think a lot of these things, if you've got a good discovery, the market takes care of itself, and the companies in the industry who are looking for this type of deposit will come to the fore. So, yeah.
Well, thank you. Very, really interesting. Very good.
Yeah, thanks.
Thank you, Martin. We'll turn now to Murray Vandevelde. Murray?
Good afternoon, gentlemen. Question, trying to figure out what would be a happy occurrence with the drilling results. I guess you're hoping to find something north of 1 gram per ton and maybe thicknesses of at least 20 meters, in a couple holes, and pretty near surface. You're thinking, so if that's a pit then? And because if it's underground, it's got to be higher than that. I'm just wondering what makes you happy, and what makes you throw in the towel, and what makes you say, well, we're not sure, but we'll keep going. Maybe that'll help us a little bit.
Yeah, so the economics, and I'm certainly very familiar with the palladium economics, having come from Lac des Îles, where we developed resources. I was involved in all the feasibility studies there, either as one of the lead authors or definitely on the technical side, on the resource side, the sort of overseer of those things. And at LDI, you got a mill already there. You need over 1 gram for a pit. And certainly we've got more credit in platinum, gold, and nickel and copper than what LDI typically has. But definitely there's more platinum gold credits at East Bow. So they had to have that plus 1 gram. So we might look at it more on an NSR value basis, $50 a ton rock, which would probably be, a gram palladium equivalent, a little bit less, is interesting. If you want to slam dunk, it's got to be over 1.5. So for me, if we're in the 1 gram range, we're in the right place. If you're seeing in multiple intersections over tens of meters, and then it comes down to strip ratio, as you know, and if you got something around 2 to 3 to 1, you got the right geometry, you can get away with 1.5 grams total palladium equivalent if you got the tonnage. So for me, it's like 50 million tons, 1.5 grams. That's kind of resource for the surface, near surface part. The really exciting bit is if you get on one of these vertical feeder systems, then you can start caving it from surface. So then your transition to underground mining is very low cost. You can start with a pit like they did at LDI and then cave from the bottom of the pit, or you can actually start caving fairly quickly from near the surface with different configurations. And for that type of deposit, you need 3 grams sort of palladium equivalent. $120, $150 a ton rock NSR value, that's what you need. And the thickness there, you can mine down to 10 meters minimum thickness for this bulk mining that I'm a big fan of after seeing it successfully implemented sub-level cave mining at Lac des Îles. That's what we'd be looking for, a vertical ore body 10 to 20 meters or more thick with an average grade of 3 grams that's got huge tonnage, right? So like I was trying to show you on that map that was comparing the size of East Bow Lake and the size of Lac des Îles, we've got 30 kilometers of prospective structures. At Lac des Îles, there was 1.5 kilometers, basically, 2 kilometers max. And that held 10 million ounces global resource. So, these, they look like small things on simple maps. These are big features that any one part of that structure, any of those structures could have, 10 million ounces, 100, 200 million ton ore body. It just is an outcropping. That's typically what you see in the Canadian Shield. A lot of the ores that are associated with structures are softer rock. They're altered. They get weathered out by the glaciers, and they end up being in swampy or low-lying areas. There's no outcrop. So I think what we see at East Bow, we found the smoke. We found the 1, 2, 3 gram mineralization at surface, and now we're looking for the hot spot, the feeder zone, the fire, as we like to say. So we found the smoke after the fire. So that's the grade range and value that we'd be looking for.
Perfect. That's very helpful. Thank you.
Thanks for those questions, Murray. Michael Potter. Michael, do you have any questions today?
Yes. Thanks very much for a very interesting talk, Dave and Robin. There seems to be a hole in your land holding there towards the eastern end of the block. What's in there?
Actually, that was a hole. It was held by some prospectors, but we actually just recently acquired that, so under option. And that's an area that was a quarry. They were using it for dimension stone, and they had stripped a lot of the rock, and there was quite a bit of mineralization in there. And we went back and negotiated an option with those individuals. So there's no more hole. There's no
more hole. Okay.
Yeah.
And down the line, can you see the magnetotelluric technique being useful again in Manitoba?
Yes, actually, I was just talking to the geologist that was running the drill program, the last program, and was the guy that really made the discovery there. And he just stopped by here on his way out. He's going to run our program at East Bow Lake. And he and I were talking about that Mayville PGM zone and he's looking at the data for East Bull Lake, and he's saying this should work like a charm at Mayville in Manitoba. So if we have the funds available and we can get our focus a little bit split and look at things in Manitoba and at Mayville while palladium market's hot, I would like to try that MT survey method there, because it looks to be a structural target, that's for sure.
Okay, thanks a lot. Well, I wish you all the best with the drilling.
Thank you.
Thanks, Michael. I'm going to turn it over now to Scott with any questions that have been chatted in. Scott, do we have any questions from the audience?
Yes, we do. First one is, what analytical method is used for assaying, and which laboratories do you use?
So it's a fire assay for gold, platinum, palladium, and it's done with a lead cupola method. It's a very well established method. It's very precise and accurate. And so it's a 30-gram pulp or a crushed rock powder that we use. So it's a pretty good size sample from the drill core. And the laboratory, we haven't announced who we're using, so that'll be out soon. We're just in the sort of process of signing a contract. But it's a very well established, reputable global laboratory that we're using. I had good experience with them in the past.
Great, thank you. And final question actually comes from Twitter, from Chris Berry at Seaberry1. And here's his question. It looks like the management team has some deep experience in the mining development space. What are some of the main lessons learned in previous endeavors that you can apply to Grid Metals to help de-risk the project and guide it to success?
Robin, you want to start?
Sure. Yeah, I always say to people that you got to know what it is you're looking for, because I see a lot of juniors, in my view, will go and spend money on some kind of target that, when you actually, even if they're successful, doesn't result in something that a deposit that's attractive to the mining industry. So I think you need to know what type of deposit will be of interest to the mining industry, aka the people that might ultimately buy you. Because if you can find something that's of interest to the mining industry, you'll generally the market will take note of it as well. So in our case, that's the kind of the open pit, tonnage and underground tons grades model, target model that Dave spoke about. And then when that's what you're looking for, you have to kind of devise a strategy that will give you, staying power. So you want to be persistent in these things, but you want to have a good educated opinion as to how what you're looking for and the geology stacks up to other targets around the world. And I think the good companies know, do we keep at this? Does it make sense raising more money? Do we drill more holes, or are we fooling ourselves? And I think that's something that experience will teach management teams, and so there's really no substitute for that experience. So that's what I think we have a good level balanced approach here at Grid, and with Dave on the technical side, certainly a lot of experience in terms of how East Bull Lake stacks up to other projects like this around the world. So I think that those to me are the key things, and then from that how to communicate that to the market and be able to finance your project.
Yeah, and I just add to that, the persistence part is critical. The willingness to test new ideas and concepts, which may or may not be widely publicized, those are the best ones when you get an early insight into some new process or forming process. I think that's where we're at. And also not being foolish with your money. So we're lucky here. We were able to build on a quite a large geological database that allows us to model things in 3 dimensions. That's really the key to exploration. Now you need to be able to project and model into the 3rd dimension to depth, and you have to be willing to go for the big prize. You know, finding a 5 million ton pit at a gram is not going to do anything. We need a big deposit. We know what the size is going to look like. We know how much space it's going to occupy, and that dictates, you know, your drilling strategy. And you have to know when to fold up, as Kenny Rogers would have said. And but we're on the exciting part now. We really are. These are fantastic targets, and I'd stack them up against anything I've seen so far from a geophysical point of view and a geological point of view. So the persistence is critical, being willing to drill deep, but also knowing when, you know, you've tested that model as best as you can, and you learn from it, and you moderate your thinking, and you refine your models. And models are like any kind of hypothesis in science. You're always trying to refine and test it. They're not facts, they're ideas and concepts built on the best available information. And for me, having seen so many different deposits and knowing what ore looks like in so many different environments, I think it gives us an advantage that, you know, we'll know when we're into something good, and we'll also know when we've tested things fully and it's time to move on to something else.
Okay, thank you for reading those for us, Scott. Dave or Robin, do you have any other closing remarks before we end the broadcast?
For myself, a really exciting time for the company. Robin steered the ship through some tough times, had some great success along the way, and I think the 2 of us working together, we're an unstoppable team. We're going to do fantastic, and just keep an eye on us, watch this space.
Yeah, I mean, I'll echo that, Dave. It's great adding Dave, and you know, there's not that many new discoveries that are highly significant in the exploration world. That, you know, we'll see what happens with us, but I think if you do see some, you know, interesting results, you know, stay tuned, because it could be a really interesting story going forward. So, having said that, I thank you all for tuning in and giving us the time and a chance to explain what we're trying to do here at Grid Metals.
Thank you.
Thank you both for the wonderful presentations, and thank you everyone who tuned in. I hope you have a wonderful rest of your afternoon.
Bye for now.
Bye.